the future of industrial innovation. I am your host, Belinda Ephraim, and today we're tackling one of the most significant economic shifts of our generation: women becoming the new face of wealth and how that is reshaping capital markets and entrepreneurship. A quick reminder, if you're watching live, drop your questions in the comments. We'll address them during our rapid fire segment. And if you're finding value in these conversations, hit the like emoji, subscribe, review, and share with your fellow entrepreneurs who should be part of this community. Today, I am honored to welcome Anna Nje Konte, a first generation American and award winning financial advisor who has walked the path from financial uncertainty to empowerment. As a certified financial planner, entrepreneur, mother of three, avid traveler, and host of the Financial Powerhouse podcast, Anna dedicates her expertise to helping women navigate life's big transitions, whether it's divorce, inheritance, or a successful business exit. Anna, welcome to the Next Gen Industrialist Show.
Thanks so much, Belinda. So excited to be here.
Yes, absolutely. I'm happy to have you on. Before we begin, it's a real privilege for me to invite people into conversation. When I do these things, I always liken my interviews to the indigenous African traditions of storytelling in community. I am going to start, but before I do, I want you to know that you're in absolute control. You can choose to not answer a question or answer the questions any way that you feel called to. Anna, what is your origin story?
Yeah, thank you so much. Well, I was born and raised in New York City, the daughter of immigrants. My mom's from Puerto Rico, and my father's from the Gambia in West Africa. And, I grew up with a lot of values, a lot of wealth in terms of traditions and a real sense of self, a cultural pride, morals, ethics, all of those things. What I didn't receive a lot of was financial education and financial knowledge, right? My parents, like many immigrant parents, I think they told me, study hard, get good grades, because they didn't come to America for me to get bad grades. And everything else, get a good job and everything else will work out. But I think what was missing there was the higher level thinking in terms of wealth building, in terms of financial security, that I have been able to build over the last, decade and a half of my career. And that's exactly why I'm so passionate about talking to people about investing, building businesses that are successful, like getting more sophistication in terms of their financial education and their financial knowledge, because I recognize there are so many of us who have done all the right things, quote unquote. We've gone to school, we've got the MBA, the JD, we became doctors, but we don't necessarily understand how we can translate that income into wealth for ourselves, not only ourselves, but hopefully further generations. And I also, recognize as a woman that a lot of times we are not privy to those conversations, or those conversations are geared in a way that doesn't necessarily speak to us. So I've spent the last, decade being really committed to speaking specifically to women's issues when it comes to money.
Thank you for sharing that powerful story. I'd like to connect your personal journey, obviously starting with your parents coming into this country. I myself as an immigrant. So I just think it's very profound, that transition, right?
Yeah.
Transferring that. They did the best they could transferring that
For sure.
information, what they knew, but then you are the first generation and you're really connecting the dots for people.
Mhm.
I'd love to connect your personal story to what's happening on a macro scale.
Mm.
Earlier this year, the Wall Street Journal published an article about what they're calling the Great Wealth Transfer. For our listeners, we're talking about $84 trillion transferring to younger generations through 2045, almost as much as the entire global GDP. And women are at the center of this shift, with approximately 30 trillion being inherited by younger women, daughters, in the next decade alone. And I've witnessed both, obviously, not really having a lot of financial knowledge and then becoming empowered. How do
Mhm.
you see this massive transfer of wealth changing the landscape for women, particularly those who, like yourself, may be first generation wealth builders?
Yeah. It's such a good question. It's a big question. So there's a couple parts that I'll take to that. First and foremost, I'll say as a financial advisor, my industry has been talking about this great wealth transfer for a long time from the vantage point of how can advisors retain the older clients' assets once it passes to a new generation. What I think that misses though is that those younger generations need to be like a relationship needs to be developed with them. They need to feel comfortable with the direction, with that understanding of how things are structured. They also need to feel as if this is not just money that they're taking over from somebody, but this is money that they are going to take and do something new with according to their values, their generation's values, their priorities. Because what we've seen is money being used in a way that is for, in my personal opinion, it chases return at all costs, that chases growth and accumulation. And I think that there's a whole segment of a younger generation that is craving a little bit more. They're craving an understanding of an autonomy. They really want someone to be a thought partner with them. They're looking for someone who is going to explain things to them, not because they're not smart, but just because they have a different level of understanding, but is going to respect that and is really going to help empower them. I think anybody Gen X and younger is really looking to be in the driver's seat, but to have a team that's in place to be collaborative and to be subject matter experts, but really just to do so in execution of what their vision is. I think it's a really incredible opportunity that's coming for women to have a lot more choices and have a lot more freedom, have a lot more autonomy in a way that, we're seeing our culture like trend towards that a lot. I think that's so much of why there have been a lot of conversations around financial independence and achieving work optionality amongst like Gen X and younger. And I think that's only going to continue to be the case going forward once more of that wealth transfers. I think, anybody who is looking at this as a macro trend, it's going to mean that our relationship to work is going to look a lot different. Our relationship to money is going to look a lot different. I think it's going to be a tool to help us live more fulfilled lives, to have greater impact on our community, on our society. Um, and it's going to be a welcome change, in my opinion.
I just find that so fascinating, especially when you talk about bridging the generational differences. But before we get into that, there was something that the article actually mentioned, the demographic factors driving this shift, specifically that married baby boomer men have wives who tend to be about 2 years younger.
Yeah.
And these women will live about 5 years longer than their husbands. So I was struck by a quote from the article where a woman said, as an intelligent, quote unquote, as an intelligent, educated woman, and she's an estate attorney,
Mhm.
of course I could do it. It was just in our division of labor that was more something he was interested in.
Mm.
When I read that statement, me myself being part of the younger generation, what concerns you most about women who suddenly find themselves managing significant wealth
Yeah.
without having been actively involved in those decisions prior?
Oh, this is such a good question, Belinda. So there's a couple of things. One, this is something that I've seen and even have walked clients through where there's a couple that have been married, the husband passes away, and then the wife suddenly is thrust into this position of decision making and she has no idea where things are. And so not only is she going through the grieving process of like mourning her husband, she also has to think about a whole new set of challenges, opportunities, logistics that she never had to. And I think that's probably the worst possible time you can think to have to get up to speed about investments and your estate plan and trust structures and who does what and taxes and all of those things. So it's something that I feel really strongly about. I think it's so important for women for a variety of reasons, right? We can think about, your life partner passing away. We can think about a case in which you get divorced. You can think about the case in terms of, financial abuse or financial infidelity. I've seen all of those cases play out professionally. And the common current through that is that the woman has delegated her financial decision making to someone else. In the best case of all of those, none are particularly pleasant. But if we think the best case scenario, you have a long, happy life and one of you passes premature, the husband passes before the wife passes away, then I think that there's probably a temptation to continue that streak of delegation and just give it to someone else rather than a spouse. It may be a son or a daughter. It may be the financial advisor himself, the investment manager, whoever it is. And my biggest problem with that is even if you have someone doing the logistics of the financial administration, opening accounts, closing accounts, placing trades, monitoring the balances. You don't want to be so disconnected that you don't understand the who, the what, the why, and the where. And that's my biggest problem with, I think, the gender dynamic conversation when it comes to managing wealth. Is that for too many people, even very educated, very smart women, they trust their spouse because he is the one that maybe is more interested in investing, and maybe he's the one that has more of a background, maybe he is professionally involved in finance in some way, and then you're not privy to the who, the what, the why, all of the logistics of the investments. And I think that's to your detriment because at the most minimal, he could be managing things in a way that you don't necessarily feel comfortable with, and that's also problematic, even if you stay together forever and live a long, happy life.
That was so powerful. And I found that, at least when I was reading the article and I read a couple of other research papers on this, it just seemed that was primarily, I feel, like baby boomer women that occurs. And so now I want to come back to these generational differences
Yeah.
because reading all of the research around this, it seemed that baby boomer women who found themselves in those positions were kind of like, well, I just kind of let him handle the finances. But then I'm finding that younger generation from Gen X down, we actually tend to be more proactive in our financial status and how we interact with, especially if you're in a couple partnership. So according to Elvest, millennials appear more financially savvy
Mhm.
than even Gen Xers and Gen Z, while Gen Z women reportedly splurge twice as much as their predecessors, but they are also more aggressive about paying down student debt.
Mm.
As someone who works with women across all of these different age groups, what patterns are you observing, and how should financial advisors adapt their approach based on these generational differences?
Yeah, there's so many. I would say there is a level of sophistication and knowledge that I see millennials come with that I find really admirable. And it's really exciting as an advisor, candidly, to have someone come to me who already has a really solid understanding at a high level, right? Like it's not their career. They're not thinking about the market or tax strategies all day long, but they have a really solid level of understanding. And so then we can have a more nuanced conversation around the merits of it. And I think that means that there's a lot less fear in that conversation, and there's a lot more action that's taking, a lot more traction that can be made in those conversations because the person already has a level of comfort. Whereas I think when someone has less comfort with all of the above, it's going to take them a lot longer, even if they have a trusted relationship with their advisor, it's going to take them a lot longer to get on board with the strategy, to feel comfortable with the strategy, to make a decision, because they're likely going to feel as though they they really have to understand everything that's going on. I also think that that's a thing that women tend to do a lot. We like to research a lot. There have been all kind of studies that have been done that women are typically better investors. They outperform men in terms of investing rates of return anywhere between zero point 0.4 to 1.8% annualized. So not insignificant when you think about over the course of an investor's life, but we tend to take a really long time to get out of the gate because we want to make sure that we have a thorough understanding. And sometimes I think we overdo it, right? They default to action, sometimes we default to research. But I think for an older generation, it's going to take them a lot longer. The other thing that I think is really important to mention is I find that with Gen Z and millennials in particular, they're incredibly focused on who, not only the service that they're buying into, but also who is delivering that service. They really want to understand who you are as a person, who the company is, like what the company ethos is, what the value set are, what the, particular person is behind the brand or behind the advisor. So whereas before, I think it was more about who you knew and whether there was some sort of vetting that was done through your personal network. Now I think it's a lot less of that. It's a lot more of who are you as a person? Do I feel as though I can trust you? Do you show up authentically? And am I comfortable with you? And do I feel comfortable with showing up authentically myself? I think that's also a generational difference. And then lastly, I would say is just values alignment. I find that there's so much more demand for values aligned investment options and an advisor who is open to having those conversations. And, that goes back to them feeling comfortable and sharing that. I read something that said 85% of millennials want to have values aligned investments.
Well, I think that's pretty insightful. Let's talk about Gen Z's millennials asset allocation.
Mhm.
Um, it seems as though affluent households typically have a greater share of their wealth in equities, mutual funds,
Mhm.
private business investments, while less affluent households tend to focus on real estate, consumer durables, and pensions. For women building wealth today, particularly entrepreneurs, how should they be thinking about diversification?
Mm.
Are there allocation strategies that you find particularly effective for women?
Such a good question. So I think the general orthodoxy used to be that you go with public equities as a way for diversification, right? But we have to think, as an advisor, I think about the arc of someone's life, and at the outset of their working career, they have a lot of human capital because they have a lot of time to continue to earn. They have a long time horizon, and they probably are going to benefit from a good amount of concentration at the outset, right? You know this, Belinda, right? That's when we're, really doubling down maybe on building our business, or we're doubling down on investing in ourselves and leveling up our skill set so that we can command a higher salary or have a more profitable business whenever we get to that point. I think what is most important in my mind, I think, is to understand what your overall allocation is and not to over index. What I see a lot of people do is they over index, as you said, to real estate. Their first default, especially if they are not, they don't come from a high net worth family, I find that a lot of times the first default investment that people want to make is to buy a primary residence. That's actually the opposite of the advice I usually give people is spend more time investing in yourself, invest more money in yourself, or invest more aggressively in the stock market because that's going to outperform most real estate assets that you have. And you don't have to spend years coming up with a hefty down payment that is going to sit in cash and lag the market for many years. Um, but I think overall, we're going to have some level of concentration. So it's really important that we just think about what makes the most sense for ourselves in that moment. And then as we get older, we start to think of a lot more about diversification because you have less time to recover from potential losses, right? The upside of concentration is if you hit it out of the park, you're really doing great. The downside is you have the potential for significant losses. And so as we get older, we want to think more about having diversification, having assets in different buckets and having assets that are more durable, more recession proof, have a little bit more stability to them. So that's where things like real estate comes in. That's where things like investing in private equity or other, alternative investments come in, because those are going to provide you with maybe some non-market correlated asset returns, and they're also going to continue to grow and diversify maybe away from some of those more concentrated things.
Yeah. No, thank you. I'd like to pivot to entrepreneurship,
Mhm.
which is a core focus here for our next gen industrialist audience. So, despite women starting businesses at record rates, funding remains disproportionately low. Less than 3% of venture capital goes to female founded companies.
Yeah.
Your thoughts on advising women on allocating capital to startup funding, either as investors or as
Mm.
founders seeking investment?
I think it's a fantastic idea. And I think this is where we can actually have a lot of impact if impact is something that matters to us, right? If we think about, if you have done all the right things and you've built significant wealth for yourself and now you have capital to allocate, it's really important to know what your secure capital is and what your risk capital is. So let's say I'm someone that I'm in my mid 40s and I've done really well. I have a couple $1,000,000 and maybe I still want to work. Maybe I, continue to work and earn money either through a business or through consulting. I think it's really important to know what is enough for your needs. So then you can make an informed decision about what do you want to do with that risk capital sleeve that's typically, going to be a smaller percentage of the overall pie of your assets, of your net worth. And you can make a decision about how you want to allocate that. What are the things that really matter to you? For some people, it may be affordable housing, it may be environmental issues. For others, it may be having a more equitable economy and making sure that women have more access to funding. So you may be able to do things like, invest in a private credit fund that will fund women, small and medium owned medium sized businesses that are owned by women or people of color. You may decide that you want to be an angel investor. You may decide that you want to invest in a VC fund that specifically focuses on women or is women run. You get to decide that. But I think a lot of times, one, women tend to be more risk averse. And so, we are a little bit more there's layers to it. But one, I think by default, we tend to be a little more risk averse. I think we tend to be a bit more detached from the financial numbers. And so then we don't necessarily know what that enough number is. And so because our default is to be risk averse and we're detached from the numbers, then we feel as though we can't take that step and that holds us back. The other bit is that these are conversations that I have a lot. I'm sure you have conversations like this a lot, Belinda, but that's not the case for everyone. So even if a woman has the idea that she wants to do this, she's probably going to have to really go out of her way to find someone that she can have this conversation with that is not going to tell her it's crazy, that it's too risky, that it's a bad idea. Oh no, you don't want to do that. You want to do this other thing. Like that's also a real conversation. So I would say anyone who really has this particular impact, focus, it's those options are completely available to you, but you have to be in the right circles. That's why I'm huge on um, investment groups. One is called Women with Capital. The other is called Invest for Better. Those are great places you can go to find a local group. They're not going to try and sell you anything. You're just going to have a circle and you can learn about how to invest in these types of things. Now, for a woman who's looking for funding, I think it's a really hard thing. I think it's your network is the most important bit, and it's hard when you don't have that much of a network or you don't have that deep of a network to really lean on to do family and friends rounds and things like that. And so that's where we have to be creative and apply our ingenuity. My biggest recommendation to anybody is to get to a place to have a business model where you have solid profit and cash flow from the outset, because that's going to make you a lot more attractive from a investor standpoint. So when you go to, let's say, a CDFI or you go to a private credit fund and you want some funding, then you've already got the proven track record, you have the numbers, and so it's a lot easier of a sell.
Yeah, absolutely. You mentioned women with capital. What was the second?
Invest for better.
Invest for better.
Mhm.
Okay. And I think to your point, that is so true, especially for women founders, the ability to be able to get to proof of concept.
Mhm.
Whether that's generating revenues, generating profits, or at least demonstrating that this thing that you're building is viable.
Yes.
I think it actually helps you when you go out to start to raise funds and or access any of these private credit opportunities that are available.
Absolutely. I would just add, Belinda, just as a last note, we saw the VC boom a couple of years ago, and then we saw it burst, that bubble burst. And I think that we're in a new reality where, and I think also the economic conditions have people being a lot more choosy and thoughtful about where they allocate capital. I think we have to be in a place where we're going to recognize that we're going to only raise capital once we have proof of concept. Like pre-revenue raises are a much harder sell nowadays.
Yeah, absolutely. Investors are a lot more pickier
Huh?
and being more thoughtful where they're investing or allocating capital. Now, like you said, there was a boom, but then there was sort of a bust, right? And they were kind of put in a position where they had to keep reinvesting in what they had already invested in, whether those were VC funds or startup companies, direct investments into startup companies. And so the amount of money that they could allocate to new funds became limited or even to new startups. Um,
Absolutely.
when you look at female founders, what should they be doing differently in managing their finances? So let's say they start this company, they build it up, it's doing really well. How should they manage their finances and plan for potential investor exits?
Such a good question. I think there's a couple of things. There's this narrative around entrepreneurs not compensating themselves well that I think is really detrimental to a lot of business owners, where they'll say, I can't afford to pay myself that, or they're paying everybody else market rate salaries, but they're paying themselves significantly below market rate salaries. And I think that anyone who is looking to, like, if the business is profitable, but only because you're underpaying yourself, that's not a business that an investor is going to want to buy. Because at the end of the day, if they're buying the business to work in the business because that's a skill set that they possess and they can work there, then they're probably not going to want to take a pay cut unless there's a lot of efficiencies that they can implement, like upon acquisition, that are going to change the numbers, or they have to hire somebody to work in the business. And that person that they hire is going to probably expect a market rate salary or some sort of equity. And so I think that's first and foremost a really important thing. I've seen too many entrepreneurs paying themselves, even if it's not because the business is unprofitable, but because of tax strategy, really underpaying themselves because their accountant has told them, make an S Corp election and pay yourself a really low salary. You can take lots of owner draws. But I think that sometimes they get into that habit and they just continually underfund themselves. The other thing I think that's really important is, I find that younger generations really value flexibility. And what I don't like to see people that own a business do is bet their whole situation on having a successful exit in the future. I'd like them to do two things. One is to extract cash flow intentionally, purposefully along the way as they own the business, and also, structure it and have a good team in place in terms of a financial team. So, like a CPA, tax strategist, outsourced CFO, financial planner that is going to help them structure things well so that when they do have an exit, then that's just gravy, right? What I see too often is people just chase a revenue level because they think that's going to be what's going to make things better for them, and they don't realize how much control they have over their personal wealth along the way if they approach it the right way.
So I want to unpack this. Let's go back to entrepreneurs paying themselves
Mm,
less than market rate and what impact that has, not only from a potential business exit perspective, but from a social security perspective. Because if they're not paying themselves well,
yeah.
and I'm going to take draws,
Yes.
which when you talk about cash flow intentionality, that is a huge red flag that
Mhm.
comes up if they do decide to sell their businesses
Yeah.
because the cash flow has always been taken out and never allowed to actually run through the business, right? But by paying themselves lower than market rates in the short term, it might make sense from a tax strategy, whatever that is for them.
Yeah.
They've been advised. But in the long term, when it comes to retirement, social security,
Yeah.
non-existent. You
Yeah.
have no trust
Sure.
because
Yeah.
can you talk about that, please?
Oh, for sure. Anybody who doesn't know the nuances of Social Security, right? Like your Social Security benefit when you reach retirement age is dependent upon your earning history. Okay. So it's not that, there is a base minimum that the government guarantees you once you have at least 10 years worth of work experience. But above and beyond that 10 years of work history of paying into that, there's a huge variation between what the minimum is and what the max is. And so you could be potentially looking at the difference between $1,200 to $4,000 a month, right? Of difference. And as someone who's in the weeds with people's financial plans and long-term projections, having more guaranteed income means that you have a lot of options and wiggle room. What happens is when you're a business owner, your business income can flow through to Social Security. But when you're depending on your structure, like if you are someone that has an S Corp or C Corp, then the only thing that's going to make a difference in terms of your Social Security record is what your W 2 says as the CEO or whatever your title is of that business. And so if you're paying yourself $30,000, then $30,000 is what your Social Security for 10 years, right? Or your entire career, you've been really aggressive on the tax minimization year over year, ignoring the long-term projections, then that's not going to be much of a benefit. Now, if you've been smart and intentional about it, maybe you have large retirement accounts that you've built up over the course of the business. Maybe you have a large you have real estate portfolio, you have other assets that are going to compensate for that lack. But I find that a lot of times that's not the case, right? And so if we're structuring appropriately, we can even think about, hey, can we get ourselves to the Social Security maximum in a year? And then anything over that, then yeah, you don't need to hit that. I don't know actually what it is this year. It's well over $100,000, right? Maybe 150,000. You may be able to get to a place where you're at that. And then from there, you can, take draws and do other things in terms of your compensation. But I think it's really important to do that. The other thing that, to your point, Belinda, is people focus on the short term, right? Like they focus on the short term. They're thinking about, hey, I want to minimize my tax bill this year. But what they consistently ignore is what their personal needs are with that. So, as an example, one thing I see a lot is someone is minimizing their income for years as a business owner and then they want to buy a house. Well, they're not qualifying for much of a mortgage if they've been minimizing their income for a long time, unless they find a lender who's very friendly to like a profit and loss loan or a bank statement loan or something like that. But those typically come with much higher interest rates. And so that's also a problem. So this is why I'm a huge proponent of let's make sure that we're considering your personal needs and your business needs together as an entrepreneur to make sure that you have the best possible outcome long term, whatever that looks like for you. It's going to be very individual.
Yeah, thank you for explaining that because you and I were both in financial services.
Yeah.
And I think it's important to share these bits of knowledge.
Yeah.
And it's vast and it's deep. But I think when we raise these topics to bring up tactical things that people should be thinking about, specifically women,
Yeah.
when it comes to financial planning, when it comes to estate planning, when it comes to bridging the gap between the personal and the business. Um, so obviously, I'm a big fan of industrial innovations. I'm always going to have to ask this question. Women have historically been underrepresented in the industrial sector. Do you see new opportunities for women to reshape traditionally male-dominated sectors,
Mm.
especially with this transfer of wealth that is coming into play?
It's an interesting question. I do think that there is a change. I don't know if you've heard, but there's this whole movement about boring businesses, right? Because there's all these shortage for plumbers and HVAC technicians and electricians, right? And I was talking to a business broker last week, and she's saying how many of her clients are in their 60s and 70s, and they're selling the business because their kid at this point way longer, and they've held on way longer than they should have because they've been waiting for their kids to want to take it and they didn't want it, right? But I do think that there is a change in perspective amongst younger generations, because I think for a while we were told, like, pursue your passions and pursue the thing that lights you up and get a career in anything. And for some people, they just think, hey, I really just want to have a solid lifestyle, and the work is going to be work regardless. And so I just want to have something that provides for my lifestyle. And I think that a lot of those sort of non-traditional avenues will be appealing to a lot of folks, right? And so I think that there's a big opportunity there with the wealth transfer to say, hey, if you are a woman that does not necessarily want to work in her passion, but wants to own a business that's solid, that wants to build a business that is an asset that provides for their lifestyle, that maybe will give them an edge. There's a lot of opportunity to buy businesses, to found businesses, to even inherit a business and innovate it, shake the dust off of it, and make it really into something that's appealing and valuable.
Yeah, and we see that a lot, especially with baby boomers.
Yeah.
Who are retiring or whatever the case may be, and your children don't want these
Yeah.
businesses. But a lot of them are not sexy sectors. My last one of my guests on the show, Carla Trotman, she has a book called Dark, Dirty, and Dangerous, and she's in electronics contract manufacturing, and she inherited that business from her father.
Mm,
Interesting to see more of that, and I think
yeah.
the ability for women to take our skill sets and actually revitalize and reindustrialize these sectors and industries, I think will be fascinating.
For sure. Like, bring new energy and new perspective to it. I think that's amazing. And I also think that the younger generations, I'm of a generation where I remember before technology, and then I remember, after technology, before internet, after. But for Gen Z and below, like, all they've known is the internet. And so they have a technological digital fluency that older generations don't have. And that brings new perspective. And so I think if we can bring a female digitally native, digitally fluent perspective to an industry that's typically been older and male dominated, I think that's just a great recipe for disruption and for innovation.
Absolutely. Agreed. 100. All right. We've reached my favorite part of the show, the rapid fire segment.
Oh boy.
I know I love this part because it's a bit contrarian questions
Mm,
that challenge conventional wisdom,
I love that.
particularly about this topic, women and
Okay.
wealth. So I want you to lead with your gut
Mm.
on this and, keep your answers brief, but if
Say
you
less.
feel, okay, awesome. The data consistently shows women are more risk averse investors than men, which we've mentioned. Is this biological reality or just poor financial education
Mhm.
designed by men for men?
I think it's nature and nurture. I think there is an element of women wanting to be a little bit more protective, a little more safe. That we want a little more safety. But I also think that the financial services industry has made it really they have not spoken to women. They've had their own prejudices, and so their language, their way of doing business, their approach to it has been to the detriment of engaging women in the investment process.
VC funding for women remains dismally low, despite studies showing female led companies deliver better ROI. Is this pure bias, or are women pitching the wrong kinds of businesses?
I think it's totally biased. I think that we've seen enough studies that women and people of color, diverse run companies tend to have better performance. And if Wall Street or investors are purely chasing performance, right? It's really about ROI, return of capital to shareholders or to stakeholders, then I don't know why you wouldn't just consistently invest in things that are going to make more money. That doesn't make a whole lot of sense.
But many advisors push women toward ESG and impact investments, assuming they care more about social good. Is this
Mm.
empowering or just another way of assuming women aren't serious about maximizing returns?
Well, oh, there's so much I take issue with there, but I think
We can
I think
unpack.
I think women tend to be more focused on the social good, but I also think that there is not all, but I also think that there is a misconception that ESG and impact investing means that you're somehow giving up return. 'Cause, that is consistently shown not to be the case. And anybody who's interested in some impact investments that have outsized returns, talk to me. Talk to me one on one. It's those two are not mutually exclusive, and I think that anybody who is doing that or messaging that is probably not all that interested in furthering ESG and impact investing.
Cool. Is the build to exit mentality of venture backed startups fundamentally at odds with how women want to build more sustainable, higher performing businesses that last a long time?
I think so, because the VC model is you get in, you scale up, and then you exit, right? And I think if we're talking about an organically grown business, that's typically going to take a little bit longer, and it's going to, but I think longer is better because it has more longevity. I think it has more staying power. I think it has more proof of concept. Um, and that's just more appealing in my opinion.
Well, I like that, but I've been thinking about this concept about
Mm.
exits and especially with businesses in general, whether they're venture backed startups or privately owned companies.
Mhm.
I feel like there is a misconception that the exit has to occur at the entrepreneur level. It's
Mm,
really about the investors exiting their investments. It's something that I've been listening and trying to understand why founders feel the need to exit their companies, but it's not. You don't have to exit the company.
no, you don't.
It's the investors. So for venture-backed startups, it's really the investors who are the ones who are exiting. You need to stay, and maybe a new batch of investors will come in,
Yeah.
but you need to stay and you need to run your company. So
But they don't want to. I think that there's something really interesting about folks not wanting to stick around in the business. And it makes me wonder what whether it was a business that they really wanted to be in, or whether it was something that they thought would give them a good payday. And I'm not opposed to paydays. I like a good payday. Okay? I'm the money lady. No issues with paydays.
green, green.
But yes, give me all the money. But at the same time, I think that there is something to be said for staying power as a founder, because you are going to be able to maintain the tone and the culture and the vision for the business and hold space for that better than anybody else. And so if we think about using VC funding, or just like you would use any other capital infusion, turbocharge, like take things to the next level for the business. But that just gives you added capacity to execute on the vision, right? And to continue to see that vision realized. I think that's a really great way to put it. But you're right. I didn't really notice that tendency, but I see it all the time. I find that a lot of times the founder exits after whatever their mandatory staying period is, and then they ride off into the sunset and do something else, and then they continue on, rinse and repeat.
Yeah, I've just always been curious about that.
Maybe it's the thrill.
You know what? It could be, but here is the thing.
Mm.
I look at let's just take the MAGA, the Meta, Apple, Google,
Yeah.
and Nvidia, whatever. Man, like you look at the history, none of those founders exited. And so for me, I'm like, what am I missing? There's evidence that demonstrates that if you take it all the way, then you're going all the way. But
Yeah.
why, why stop?
Here, I just had a light bulb go off, Belinda, and I think I
Okay,
have an
please.
idea. I think that it's a very different skill set to pitch investors to get a business off the ground than it is to create a big legacy company like that. I think creating a big legacy, Microsoft, Netflix, Apple, Google, requires you to become a different version and to up level who you are as a leader. And if you're not willing to do that, or you don't
Mm.
want to do that also, because I think that that's probably a more than full time job. on top of your job as the leadership. If you're not willing to do that, I think then it's easier to exit, right? And I'm all for self-awareness and understanding, whether you have the desire to do something, but I think it's important that we not sell ourselves short also, right? Like a lot of us do that and we don't give ourselves the opportunity to have those huge wins because we talk ourselves out of our own blessings.
Okay. We're constantly talking about the wealth gap, but rarely about financial literacy gap.
Mhm.
What is the more urgent problem to solve for women?
I think the financial literacy and financial fluency gap will fix the wealth gap. I think that if women feel more comfortable investing and making financial decisions, being in control of the money, being the person that has conversations around money, then they're going to make more investment decisions that are going to help close the gap.
In an AI driven future economy, will women's reported trends in emotional intelligence and relationship building become more financially valuable than
Oh,
traditional male dominated skills?
for sure. Because listen, AI is going to do everything for us, Belinda, right? Like it can do anything. I saw, now this is a tangent, but I saw a podcast episode today come across my Spotify feed that was talking about how someone fell in love with ChatGPT. And it was a whole story about someone falling in love with their ChatGPT. Okay. So apparently, chat AI is AI is replacing a whole lot. Okay. I think that AI has such an incredible opportunity to allow us to let go of the mundane things and for us to really focus on the things that only human beings can do, which is, interpersonal dynamics, emotional support. It is helping people work through issues, lift the blocks that they may have to take things to the next level, think strategically. Like those are all the things that we as humans, in my job, I think I'm a wealth advisor, right? I can I can have software to scan a tax return in minutes and spit out some numbers. I can have software that can scan somebody's account statements and tell me trends about their spending. I can have a software analyze someone's portfolio and tell me the risk return profile, tell me whether it's excessively risky or not risky enough for them. That can be done. Give me an hour and some software and I will have your whole financial life together. But what it's not going to do is to sit and talk to that person about what do you want and what's going to make you feel fulfilled and how are we going to get this money and all of these numbers to do that. That's always going to require a person, and I think women have been trained to be a lot more emotionally attuned to other people's needs, and that skill and that default is only going to benefit us in the future when everything else is commoditized by AI.
Amazing. So we're almost halfway through this decade. What excites you the most about the future?
Really excited about women owning their power and being a lot more intentional. I also am really excited about where technological advances are going to take us in terms of work life balance. I think that for the entrepreneurs who are really smart about AI and any automations they can get their hands on are going to have a lot more work life balance. And I think that's a beautiful thing because for the longest, the narrative was that entrepreneurship meant that you cannot have a work life balance, right? It means that you are sacrificing everything that makes you human in order to get the payday to then have the time to do the things that you want and that you're a slave to your business. And I don't think that that's the case. And I'm really excited. That's been my own personal story. I have an excellent work life balance, and it's because I'm a very technology, automations, process forward business owner. And that allows me to not have to spend all my time in front of my computer or talking to clients. And I get to do so in a way that really adds value while also, really having a full life outside of that. And so I think that we're only going to see that grow. And I'm super excited to see more businesses running more efficiently while also providing well for the founders.
I love it. Love it.
Mm.
Imagine it's your last day on earth many years from now, many, many years,
Yes.
and you've accomplished everything you've ever dreamed of. But for whatever reason, you have to take everything you have ever created in this lifetime with you, and no one will ever have access to any of that information.
Mm.
In other words, people can go in, Anna, in Konte, and nothing comes up. You get to leave behind three truths, three kernels of wisdom that you want to live with the world. What are your three truths?
Oh boy, that's a big one. I think that the first one would be that the world is much more beautiful with whatever makes us unique, and that everyone trying to be the same and to be similar is really to the detriment of society, and that just sanitizes things and it makes it less fun. The second is that that's a hard one. People are a lot stronger and a lot more capable than they give themselves credit to. And I think that our lives are just a series of, or my personal philosophy for life is that it's my job to see how more I can lean into my own power, how I can become more powerful, and not in the way of like controlling other people, but just internal power.
Mm.
I also think that um, life should be a lot more fun. Like we should default to fun and not be so serious. There's plenty of room for being serious. There are plenty of things to be serious about. And there's a time and place for that. But that doesn't mean that everything has to be heavy and we can have a good laugh.
So I'm going to summarize what you just said.
Mhm.
The beauty in everything, inner power,
Mhm.
and not really worrying about the external factors that
Mhm.
contribute to our lives.
Yeah.
And have fun
Yes.
in everything that we do, to always find fun. I love that. I love it. What's your definition of a next gen industrialist?
I think someone who looks at their industry with a fresh set of eyes
Mhm.
and that is not afraid to disrupt the status quo, to be loud and proud about that. Like naysayers be damned.
That is the quote for this episode. Be damned.
That's it. Because the
That's
thing is, like, nobody, if you ever look at anybody who has done something big, everybody has said that they were crazy, that what they're doing doesn't make sense. We don't do it that way. That's not how it's done. And then later, they're all proven wrong.
Wow, this was a beautiful conversation. Thank you
Thank
so
you.
much for sharing
So
your
pleasure.
expertise. Yeah. For our audience, where can people find you?
Yeah. So my website is poderwealth, Poder wealth.com. You can find me on social media. I mostly am on LinkedIn and Instagram. You can just search my name and I'll come right up.
And you have a podcast.
I do. Oh, you're right. I do have a podcast. So it's the Financial Powerhouse Podcast. You can find that on Apple and Spotify. We come out with new episodes every Monday, and I would love to have you listen.
Well, thank you, Anna. We'll include all of the links in the show notes. And to our audience, if today's discussion resonated with you, remember to hit the like emoji, subscribe, leave a review, comment, and share with fellow entrepreneurs who should be part of this community. We'll be back in 2 weeks with AJ Unwosu. We'll be exploring the topic of creative critical thinking in leadership. Until then, this is Belinda Ephraim and my guest, Anna Inje Konte, reminding you that innovation is where curiosity and preparation meets opportunity. And please don't forget to have fun in everything that you do. Until we meet again, keep building the future of industry and pushing the boundaries of what is possible. Take care.
Bye.